The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Marc, and Tucker broadcasting to you from the middle of the haze that is inhabiting New England right now. Again, coming in, Tucker was like, man, it looks like Mars out there.
And everybody's like, this is fine. This is totally fine.
I think it's more Venus, personally. You know, it's not really a red tint. It's more of kind of a yellowish, end of the world type situation. But look, it's every summer now, Canada catches on fire, and New England has to breathe it in. And I guess that's just what we do.
And we're just attributing it to, like it's a foggy day. We're like, it must be the smoke. It's fine.
Well,
it's good.
I got to be honest. So
Don't worry about it.
Yesterday, I'm sitting there, and it's like 11:45, and I look at my phone. I'm like, it was supposed to be like 95 today. Let me take a look. And my phone says it's sunny out. And I look outside, and I'm like, it is not sunny. It is very much...
What's that basketball in the sky?
Cloudy.
Yeah.
And all I know is, for whatever reason, like, this thing that happens here, it makes the world look a little bit unnatural. And, I got to be honest, if it were, 3,000 years ago and you didn't have access to, like, weather.com and stuff, I think very much you'd be like, yep, this is it, world's going to end.
Yeah. Vesuvius just blew.
Call it in, like, we're done here. I guess that's it.
Yeah, this is what the dinosaurs saw.
So honestly, the place where I most felt that was 2 years ago when we had the big eclipse. I took the family up to Burlington, Vermont. Eclipse Central, like right over Lake Champlain, like fantastic. But as it's happening, on one level, like I gotta be honest, if you've never actually gone and seen like the totality, you have to at some point, because it's totally different from the partial. Like it literally, like all the animals start making their night noises and stuff. Like it's kind of weird and spooky, and kind of emotional also, because you're like, man, like this is just wild. But then there's a part of me that goes through it and is like, I understand why the Mayans thought the world ended every like 2,500 years or so, or whatever it is, because you see one of these and you're just like, okay, that's like the end must be near, because it just got like pitch black for 5 minutes and then the sun came up again. What was that? I understand why one would think that the world is ending. Which brings us to the stock market. Specifically, this piece from the Wall Street Journal. Blockbuster stock sales are threatening to overwhelm the bull market. Marc, didn't Blockbuster Video go out of business quite a while ago?
Funny you should ask me, as one of their last customers. Yeah.
You were very pro Blockbuster?
I was. I used to like the video rental experience.
I enjoyed it too.
It was fun as a kid and a young adult picking out
I
your
understand
own stuff.
why we went towards the model that we have now,
Yeah.
but I loved, spending half an hour on
That's
a Friday
just it. You
night
could
just
kill an
walking
hour
through.
with the kids just doing that. And then,
it was great.
Yeah.
Like you're having to like figure out, okay, which one are we going to rent?
It was fun.
There's the 400 copies of Titanic on one wall, and then there's like somewhere hiding in there is, I'm trying to think of like, there's like one copy of Gremlins that's still there that like, someone might rent. And then of course you have the part where hey, you've got to bring it up to the person at the counter. And that judgy person at the Blockbuster counter is going to say, oh, you're renting this again, or, ooh, I love this one. But what we're talking about here is not that Blockbuster is taking down the stock market, but rather you've had $344 billion of new stock shares issued to investors this year. There's also been, there's a huge amount of debt that's being issued as well that looks like we might end up issuing between stocks and bonds this year somewhere around $800 billion worth of shares and or debt. And people are getting nervous about, like, hey, where's the funding for this going to actually come from? Like, how's this going to work? And I get that. What I often say, though, is, look, the things that end up taking down markets aren't the things that everyone knows about. It's the stuff that no one has on their bingo card that, people have wrong. Case in point, last year, the thing that spooked markets last spring that finally kicked off, a sell-off that was looming for several months before was tariffs and the threat of, high tariffs being imposed. This year, it was, hey, like, there's a war going on in the Middle East now, and most people didn't think that was going to happen this year. So I don't really think that this in and of itself is going to be the problem, because we know this is coming. It's not something that's going to be the issue. The issue will be, hey, something tangential that has no relation to this, but ultimately, like, kicks this into, okay, this is a problem, but we know about it, to this is a problem and now we can't deal with it. That tangential thing is going to be the what kickstarts any issue, not this.
Yeah, secondary sales aren't inherently problematic. One of the points made in the article is they've tended to balloon in the late stages of a bull market. So there's some kind of portent. I didn't infer from the way they wrote this cause and effect. It's just sort of a portent, like the eclipse you were talking about.
Yeah.
We don't know what to make of it. This might be bad. Oh, look, it's always happened when it's always preceded something bad happening. So a company going to market could be many companies deciding to do it. Conditions are favorable. Financial conditions remain favorable. We have the deepest, most dynamic capital markets in the world. It's a good statement about the dollar strength, too. I know I always try to insert this point in there just to remind people why companies want to list here. We talked about Samsung yesterday. We'll talk about a couple of others today that want to tap American capital markets. It could also be framed as a healthy sign. Could it be a symptom of irrational exuberance? Everybody just wants shares that have any. Of course it could be.
Sure.
But inherently, I don't think it's not destructive. Maybe I'm missing something.
No, it's something where generally what I see, and the thing that I do think is worth watching on some of this stuff, not for the market as a whole, but on some of these companies that are raising capital, especially the ones that are IPOing, hey, the IPO ones, once those lockups expire on their shares, you often do see some volatility within a particular issue as a result of it. Does that spill over to the broader market or not? Well, we'll just have to wait and see. But I think this is a well-researched phenomenon, which is, hey, when lockups expire for a lot of these shares and insiders are finally allowed to sell them, yeah, that can have some problems balancing supply and demand in the short term.
I guess one concern here is that something's going to shatter the AI fantasy. I'm calling it a fantasy because it hasn't been realized yet. And it's largely sentiment-based. It's hope-based at this point. I'm not saying it's not grounded in a lot of sound findings to date, the potential of it. But if something changes people's views, their emotions about AI, it could be a catalyst for a pullback in stocks.
Let's take a quick break because I think there's a nice segue here into what IBM said yesterday and what it means about artificial intelligence in the next year or two. Quick break, and then we'll talk about Big Blue after this.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find interviews, show highlights, and complete shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Yesterday, IBM lost $69 billion of market cap in one day. I don't know why we like to frame like the losses on a day in terms of market cap, because I get that like it sounds impressive, but it's like, oh, like Mark Zuckerberg's net worth changed by X today. Well, I don't think he was buying or selling his shares on that particular day, so it doesn't really matter. But here's what I do think is interesting. So IBM reported their earnings, and pretty much what they said, the CEO was like, look, we thought we were going to be able to execute this quarter, but it turned out people were prioritizing their CapEx spending instead of software, and so we had a bunch of deals we thought were going to close this quarter. They didn't close, and hopefully we can get them done next quarter. But this does get at a key idea, and I think the one that all of us should be wrestling with when it comes to AI, which is, look, for corporate spending, there's only so many dollars to go around. If you have a company that has a $1 billion expense budget overall, and you say, great, we're going to allocate, $100 million of that to spending on AI this year. Well, that spending's got to come from somewhere if you haven't otherwise increased that budget. And this is kind of how it works for most companies, because unless you are a memory chip maker, your revenue is not, going sky high this year. It might be on, the same steady increase it's been on for the last couple of years or this and that or whatever, but there are only so many dollars to go around, and this gets at the crux of the problem for how AI is going to actually be net accretive to the bottom lines of these hyperscalers, where, look, do the math out and say, let's say that hyperscalers as a whole are doing $4 trillion of CapEx over, a 4-year period. Okay, the revenue that you need to make at 50% margins to cover that is $8 trillion, effectively, like when you look at just like the basic math, but it's got to be amortized, over, the depreciation for when that actually hits. And so you're looking at this and you're going, okay, over a 7 to 8 year period of time, where am I going to find like $8 trillion in new revenue? And the only way that you get there, in my opinion, is by companies being able to replace their employees with AI, not simply empower their employees with AI. Because otherwise, if all you're doing is saying, yeah, we're going to empower our employees with AI, well, you still got this huge employee expense. There's nothing else big enough to offset all that other cost. And this is where the math is always broken down for me, and I've struggled with it, is the question you're trying to get to is pretty much, can we get the AI good enough to replace employees before the costs start hitting our income statement?
Well, the other way is, of course, issue more stock, which we talked about.
But you can only do that for so long if you're not
I'm not
profitable.
saying it's like a panacea.
No,
yeah.
it's like...
But for now, investors seem not to have diminished, seem to not be taking that into account.
Well, so I think it's interesting in that...
Oh?
I think this one's interesting, actually. If we look at where the spending is coming from for the hyperscalers, like specifically the companies, it's Magnificent 7. Like it's Mag 7 minus NVIDIA, because NVIDIA's on the other side there. So when we look at those companies and we look at how the Magnificent 7 have performed this year, the interesting thing that I don't think people might realize is that Mag 7 are basically flat year to date as a group. They're up like 2% year to date. And so like you go through and you look at them and you say, okay, Microsoft opened the year at $490 a share. It's at $396 right now. It's down 20%. Amazon opened the year at it's finally made a little run in the last little bit. Amazon's up 10% this year now after the last 2 weeks, but prior to that it was flat for the year. Google has been the one that's kind of knocked the cover off the ball more than anyone else. Google still is only up like 15% this year. You look at Meta, who's just gotten absolutely punished until the last, again, week or two. But Meta before that was down like 25% for the year as well. And so you look at this and you're like, okay, like, yeah, they've been able to issue more stock and debt, but it's not like the stock they've had has, performed particularly well. It's not like investors have been excited about these companies this year, despite their earnings as a whole growing by, 25% approximately, on an annualized basis. And so I think the place that I end up on this is investors are starting to ask, okay, if you're a hyperscaler, can you prove that this is going to actually work out for you on the stock side. The debt side makes sense in that aside from Oracle, you can make the math work for any of these hyperscalers being able to pay for the debt that they're issuing. They don't have any... If they just stop building data centers the way they're building them, they can cover the cost of all this debt issuance. So, like, why wouldn't you... Like, I can understand the logic of, okay, I don't know where Microsoft's stock is going to be, but if Microsoft issues a 10-year bond, yeah, I bet Satya can figure out how to get me paid over those 10 years.
And there's no spread over treasuries for that reason.
Right, like that makes sense to me. But it also makes sense in that, hey, if you're issuing more debt and more equity, and this is a little uncertain, well, yeah, I'm not sure I want to own your equity, and so that's why Mag 7 as a whole have underperformed the U.S. market this year. Like, those ideas, I think, make sense when you hold them that way. But ultimately, the question is, okay, what is going to be the way this breaks? Are we going to get to the point where companies say, yep, we can start laying people off en masse because of AI, and then the data center investment makes sense? Or do we not get there, and the first move is companies saying, it's time to start canceling data center investment? It's going to be one of those two things, because I don't think
where
you can
does
just muddle
increased
through.
revenue factor in to that?
Increased revenue for what?
From...
It's going to be if companies start laying people off and taking payroll and moving it towards AI spending. If Caterpillar says we can lay people off and start spending on AI.
Oh, I'm sorry. I was thinking hyperscaler spending. I'm sorry.
Well, the hyperscalers need revenue from everyone else.
Yeah,
there aren't enough coders.
I'm sorry. I see your point now.
There aren't enough coders in the world to pay for $4 trillion of data center. Like, there's just not. That doesn't exist. What you need is for every law firm, every bank, every ad agency to say, yep, we can lay our people off and start using AI for these roles. And not just like a couple, but a lot. Maybe that's where we go. Maybe it's, no, we can't get there. I don't know. But there's only so much spending to go around from companies.
Yep.
And if you can't cut payroll, you're not going to find enough to pay for $4 trillion in data centers.
So coming back to IBM,
yes.
If most of your revenues or profits, I forget which, come from software or consulting, and there's only so much, companies only have so much money to spend on these things, if you group that in with AI spending, whether it's software, thus their disappointing performance.
Maybe in the short term.
Yeah,
but
in the short term.
Yeah. But it's the question of, okay, is this what companies are doing this year, or is this what companies are going to do every year for the next 15? And I think the jury is very much out on that question right now. Mm-hmm. And we're getting to the point where it's going to have to resolve in the next year or two. So that's, I think, where things are going. On the other side of this, ASML, the company that makes the lithography machines that etch the circuits into the silicon wafers and everything, they are continuing to raise their outlook because they say, yep, we got all kinds of demand for these because everyone wants more chips right now, and we're the only ones who can make the machines that make the chips.
Yeah, no surprise there, right?
No. Again, the first domino to fall will be the hyperscalers saying we're cutting spending on CapEx, and then everything else falls into place from there. Like that's the sign the party's over. We're not seeing that yet. What we're seeing right now is, okay, Meta and SpaceX saying, well, we're going to lease out this excess capacity. If they can't realize those leases, if they can't lease it out, that's when you start to see the move. Let's take a quick break. Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are modestly in positive territory with tech building on yesterday's gains. Wall Street's also continuing to monitor oil prices amid new attacks from the U.S. on Iran. Right now, the Dow's up about 0.5%, S&P 500 up over 1/3%, NASDAQ up 0.5%, Russell 2000 up over 0.5% as well. 10-year Treasury yield down 3 basis points at 4.55%, and oil up about 1/3%, trading at $79 a barrel. Shares in ASML are mostly flat after beating second quarter expectations and lifting its annual sales guidance for the second time. The company also said it would increase output of its machines in the coming years. Meanwhile, PayPal stock surging nearly 17% and is on pace for its best day ever after Reuters reported that payments processor Stripe and private equity firm Advent offered to buy it for $60.50 a share, which would value PayPal at more than $53 billion. Elsewhere, more bank earnings. BlackRock shares are rising 7% after the firm's assets surged to a record $15.3 trillion in the previous quarter. Morgan Stanley up by 1% after it posted record quarterly revenues and profits, and after its 25% plunge yesterday, IBM shares are flat today. Tuesday's session marked IBM's worst trading day on record after its preliminary second quarter results disappointed. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
And as promised, we're now joined by the one and only Todd Lutzke from the law firm of Cushing & Dolan, and he's here to answer your estate planning questions live on air. Phone lines wide open at the moment at 888-205-2263. Again, that number is 888-205-2263. That's the number to call to ask Todd your estate planning questions live on air. And we can usually get through 2 or 3 of your calls, and so get calling early, get calling often to make sure Todd can answer your question. That number again is 888-205-2263. Again, 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better. How are you doing?
Good. I've really been enjoying the World Cup. Yeah, over the last month or so. It's been fantastic.
I enjoy it too.
I actually met a boy the other day who was half French and half Scottish.
Yeah, who do you play for?
He's a wee lad.
That's good. Yeah, that's good.
It's been great. Todd, want to talk to you a little bit about Medicaid, and specifically, let's say that someone is going into a nursing home.
Yeah.
And is trying to have Medicaid cover the cost of said nursing home.
Yes.
What does a Medicaid application actually look like? Is it like a form you fill out at the DMV? Is it like taking the SATs? Like what is the Medicaid application? Like how does it work?
Yeah, that's important. We talk so much about planning, Scott. I'm sorry, Scott.
I appreciate that. I appreciate that, Mike. Thanks, Rick.
Yeah. So, Chuck, we spend so much time, talking about how to save assets from the nursing home with irrevocable trusts and whatnot. But inevitably, and I think you're right to bring it up, Chuck, that there's going to be assets that are either not in the irrevocable trust when, you've done your planning because you can't put everything in there, or you've not done your planning and there's a whole lot of assets that are at risk. So either way, we have to face that when we're going through the Medicaid application process. And it's important to know that some assets are countable, some assets are not. You have to figure out what to do. Don't apply on your own. But the application process itself is so time-consuming. Like, one, you're going to need 5 years' worth of every bank statement, 5 years' worth of every investment statement, IRA statement, 401k statement. You're going to need 3 years of tax returns. You're going to need your birth certificate, your social security number. You're going to need your driver's license. You're going to need Medicare card. I mean, on and on you need to go. A deed to your house. You're gonna need to show everything because they're looking to see if you made any transfers in the last 5 years. That's why I came up with the 5 years amount of bank statements and whatnot. They're looking to see if you've done anything to create a reason to deny you Medicaid benefits, right? And so once you fill out all that and you put all that information on the application, you have to support everything on that application with all this information, and then you send it in. And then they're going to sniff it over. And almost inevitably, no matter what you send in, they're going to come back to you in about 30 days and say, here's what else we're looking for. And then you're going to have 30 days to reply to that. And you can only then hope that you've got everything in order. You've met the financial eligibility requirements. You got the assets spent down the way you're supposed to. Then 30 days after that, so 90 days on a good day, you could probably get an approval if you're in order, or at least an answer back saying you're approved or denied. And now the key here is those 30-day windows, and this is why you don't want to apply on your own. First of all, you're not going to know how to save assets last minute if you do this, but if you don't have a lawyer. But more importantly, if you miss that 30-day deadline, you've lost an entire month. Okay, and so that could cost you $15,000, $16,000, $17,000 because your ability to go back up to 3 months as you go through the application process would be lost. And so now you can only go back, you've wasted a month. So now you have to go pay privately for that month. So folks, a lot involved. Good question, Chuck or Zach or whoever you are today on that.
Thanks, Steve. Talking with Todd Lutzke from the law firm of Cushing & Dolan. This is your chance to ask Todd your estate planning questions live on air right now. Phone number, 888-205-2263. Again, we usually have time for a couple of questions here. Still have some room there. So 888-205-2263 is the number for you to call. We're going to take a quick break, but when we return, we are going to get to your questions with Todd. That phone number is 888-205-2263. Again, it is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Still room on the phone lines at 888-205-2263 if you've got a question for Todd Lutzke. Let's go first to Phil in Worcester. Phil, what's your question for Todd?
Hi, Todd. I was left $30,000 in a will. It's in a trust right now. I'm on Social Security. I get disability Social Security as well. I'm on food stamps. If I take that money out of the trust, is anything going to be triggered?
Yeah, so that's a great question. You said two things. Once you said it's in a will. Secondly, you said it's in a trust. So did you get it through the will or did you get it in a trust?
My father died and it was left in a will, but that money was put into a trust.
So how did it get from the will to the trust? The will either said, I leave it to Phil, or the will said, I leave it to a trust.
No, like I said, it was my father. It was left to me, but whoever wrote up the
will,
his assets, the will, put it into a trust.
So, all right, I don't want to beg the question, but again, if that will said, your dad's will said, I leave $30,000 to Phil, then Phil, you would have got it. There would have been no way for you to not get it other than to disclaim it. If the will itself said, I leave these $30,000 to a trust for the benefit of Phil, then that's a different story. Okay? And so I think you just need to get to the bottom of that. And I'm going to go with you saying that you agree that it's in a trust, so I'm going to say that the will must have directed it to a trust. So what you need to do now is read the terms of the trust, and if the trust says, I hold it in trust for the benefit of Phil, then it's not going to disturb your governmental benefits in any way because you don't own it yet. But if you took it all out at one time, it could impact your governmental benefits if you're asset-based. And I don't even understand exactly what benefits you're getting, but if you're asset-based benefits, meaning if you have more than $2,000, it might be considered a countable asset and could cause you a problem. My advice is read the will or read the trust and maybe take it out slowly as needed to take care of your expenses or make your life better in some way, but not all at once so as not to cause a problem with your governmental benefits. Hope that helps a little, folks. But I want to talk to you about the guide we're giving away as well this month as we're getting closer and closer to the end of the month, Unlocking the Power of Irrevocable Medicaid Trusts. We talked about the Medicaid application process, but you know what? It's a good idea to just get assets in here so they're protected. It explains in a very question and answer format that I keep adding new questions that I get from folks like you all the time as to how it works. Can I put money in? Can I take money out? How do I invest it? Is there an income tax problem? Can I live in my house? Can I sell my house? Is there an income tax problem if I sell my house? Can I buy another one? Can I put rental property in? Folks, everybody wants to know how they work. If you've never knew whether these trusts are right for you, but you wanted to know, get the guide. When you're done reading it, I think you're going to have an answer one way or another. 866-848-5699 or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com. You can download it right there. And go to Cushing Dolan PC, our Instagram page, for more information.
Todd, got another one here for you. Let's go to Sean in New Hampshire. Sean, what is your question for Todd Lutzke?
Yes, thanks for taking my call. My wife has full-blown dementia. Mm-hmm. We have 2 pieces of property that are in a trust, family trust, mm-hmm. and all the other accounts are, if I pass, everything goes to her.
Joint.
And vice versa.
Yeah, joint.
And then after my wife passes, everything goes to the kids.
Yep.
Equally. So what should I do to kind of change that? Because she wouldn't be able, if I pass, everything goes to her, but she's not capable of handling.
So I think the bigger question is twofold. One, are you worried about her if she goes to a nursing home? Are you covered to cover the cost of the nursing home, or do you want to know what happens if she?
No, I'm covered. No, that's no problem.
Good.
I just wanted to know how to handle if I pass first.
I would set, if you've got a family trust in place, what it said you did, I would make sure not only the properties are in there, but as many bank accounts and investment accounts that are non-IRA accounts, those can't go in. I would make the owner of those accounts the trust and get rid of the joint, okay? Because this family trust you have likely will have a trustee. Now, if she's not competent to serve as trustee, and she obviously won't be, then you'll have an alternate trustee, which is likely one of your children, and then the trust will be designed to take care of, hold the assets, and take care of your spouse with those assets through the trustee. So the trustee can help you accommodate that. And of course, it helps you avoid probate. It reduces estate taxes better, the more assets you have in there. So make sure you get that tucked away first, and then you don't have a problem. And lastly, change the designated beneficiaries on your IRA, maybe not to go directly to your spouse, but instead into the trust, and then that'll be protected and used for your wife as well. So hope that helps.
Todd, got one more for you here. Let's go to Joe in Fitchburg. Joe, you're on with Todd Lutzke.
Hi, Todd.
Hey.
Thank you for taking my call.
Sure.
I'm thinking about selling a business, and it's in a trust.
Okay.
So how would I go about doing that?
Is the trust revocable?
I think it's irrevocable.
Oh, okay. So we need to really know that, number one. So if it's irrevocable, who are the shareholders of the business? The trust?
Myself. I own the business outright.
So when you say you own the business, you own the stock in the business.
Yes.
Is it an S corp or a C corp?
It's not a corporation. It's an individual business.
Oh, so there's no stock. It's just a doing business as kind of thing.
Exactly.
Sole proprietorship.
Exactly.
Okay. So then it probably is not owned in an irrevocable trust, right? It can't be because you're the owner, you said.
Yes, exactly.
Right. All right, so it's not in a trust. So I think we got past that question already.
Okay.
And so now you're just basically selling your business, whatever it is. It's either going to be an asset sale or it's going to be a stock sale. right? So we're going to have to figure out what's the best income tax way to sell this. I mean, do you have account receivables? Do you have customer list? Do you have goodwill on the name? Or do I have a bunch of equipment that I want to sell so it's more of an asset sale? These are all things that, as you might imagine, this is going to be a little more complicated than you can answer in a few minutes on the radio. But the bottom line is get yourself a good tax lawyer, because how you structure the sale from a tax standpoint is going to make all the difference to you. In other words, can we allocate more of the sale proceeds to capital gain and less to what is ordinary income? That would make a big difference just in the rate structure. And that's going to be a function of what kind of sale is it. Again, asset sale or stock sale. So I think there's a lot of information you're going to have to provide to me or to whoever the lawyer is that you use about the sale. But you're right. You're spot on. You ought to definitely seek out counsel to get help on selling a business.
Mr. Lutsky, thank you so much for joining us today.
Yeah, always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch to come as we head towards the second hour of the show. We'll be talking about what we're seeing in oil prices as the new blockade kicks off in the Strait of Hormuz. Also, a little bit of chatter about the housing market. And then we'll talk about whether it's fair or not that people get to leave their inheritances to their kids. I don't know why this is like a contentious thing, but there's a whole piece in Bloomberg about it, and so we'll discuss that in the next hour. Also, a little bit of chatter about credit card delinquencies. Haven't talked about it in a few months. We'll give you an update on what's going on there, and a whole lot more coming up.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. Heart Walk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, and it's Mark, and it's Tucker with you here. And as we kick things off today, again, kind of the same story as the last couple months, where on the surface, not much movement for the major indices. The S&P 500 is up about 0.2%. Dow is up about 0.5%. NASDAQ Composite up 0.25%. But under the surface, it's honestly just a mess, and it's getting a little bit dangerous in terms of what we're seeing. We'll discuss as we go. But I do like to point out the S&P 500 pretty much hasn't moved in 2 months now. Back in mid-May, it hit 75.17. This morning, we're at 75.58, so up 0.5% in 2 months. It's just not a lot of movement for the index as a whole. Now, we have had these ups and downs. We got as high as 76.20. We got as low as 72.37. So there's been, kind of this, 6-7% range that we've traded within. But it's very reminiscent of what we saw from kind of like late October through late February. That 5-month period where October 25, we hit 69.20. We were at 69.20 at the end of February of this year. So just like 5 months where the S&P just chopped around and didn't do anything. The thing that we're seeing here, though, is under the surface, there are just these rotations between sectors on a daily basis that are getting more and more violent and are just, fundamentally unstable. The thing that's keeping the index where it is right now, correlations between stocks, how much one movement impacts the other, or not necessarily impacts, but how much, one stock correlates with, another's movement, those are pretty much at all-time lows, and that's what's suppressing volatility for the index. But I got to be honest, you see stuff like this where, Micron Technology's down another 7% today. Like, it's up 8 one day, it's down 7. Intel's doing the same thing. It's just not healthy behavior. And eventually it gets to a point where markets just, you can't maintain that dispersion that's kept things intact at the index level. So we'll see how this resolves. But, again, under the surface, even though the index as a whole not too choppy, individual stocks are just seeing the kind of movement that is not indicative of a healthy market to me. Bonds catching a little bit of a bid after a cooler than anticipated PPI, producer price index data this morning, better than expected. So you got bonds, 10-year Treasury down 2.8 basis points to 4.557%. Dollar index following suit down 0.18% to 100.525. Gold Can't catch a bid with that weaker dollar, though, down $3.10 an ounce. Crude oil, West Texas Intermediate, off yesterday's highs by about 69 cents to 78.67. AAA national average for gas prices up 3 cents overnight to 3.89. Based on what we're seeing in terms of price cycling and where crude prices are and crack spreads are, you're probably heading to $4.05 a gallon in the next week or so. So up another 15, 16 cents. So again, we'll see where things go on that front. This does bring us to a piece from the New York Times titled, "What Trump's New Iran Blockade Could Mean for Oil Prices." And the answer is this: we have no idea, because we don't know how long the blockade is going to be in place. We don't know exactly what the Iranian response is going to be. And until we know either of those two things, you can't accurately get a sense of what's going to happen with oil prices.
What's your sense of, based on how far inventories were drawn down to this point, how long can we hold out without something breaking?
It depends how shut the flow of oil through Hormuz becomes here. So, again, there's been a decent chunk of oil. I guess oil's not a chunk, it's a liquid. So a decent pool of oil that has escaped Hormuz over the last 3 to 5 weeks. And that gives you a nice little cushion of oil on water that can find a home to, replenish, not replenish inventories, but basically offset any inventory draws and mitigate things. So I don't think there's a ton of risk in the next 3 to 4 weeks, in my opinion. The risk comes after that, where, look, if you get back to the draws that we were seeing previously, especially, remember, the strategic reserve has been depleted pretty significantly over the course of the summer. We're just not able to pump as rapidly as we were before. Other things that I think play into this, does China, continue to see its crude oil imports, reduced by 5 million barrels a day? That's an open question. Other things that are worth paying attention to: what happens between Ukraine and Russia? It's kind of snuck up on a lot of people, but Ukraine is conducting these nightly drone raids into Russia to the tune of 200 to 400 drones a night that are largely hitting Russian energy infrastructure, oil refineries, pipelines, things like that. You've got a little bit of a surplus of crude that's happening now because Russia can't refine the crude it's producing, and so they're sending more out. But you also don't have any spare refinery capacity worldwide because all these Middle Eastern refineries are offline because they don't know if they can transport the stuff through Hormuz. And so this is why what you're seeing in crack spreads, which is the difference between the cost of refined product and crude, they're now at all-time highs. There's a spread called the 3-2-1 crack spread, which is, okay, pay for 3 barrels of crude, produce 2 barrels of gasoline and 1 barrel of diesel out of it. What's the difference in price that you would see on a per-barrel basis? Normally, for the last 10 to 15 years, that's hovered between $15 and $30 a barrel. It's at 68 right now. And the reason why is, again, it's not because oil refiners woke up and were like, hey, let's be greedy this month. No, it's because companies are needing to buy refined product. Remember, you as a human, you don't buy crude oil. Mark, have you ever bought a barrel of crude?
I can't say I wouldn't if I could, but I don't know where I'd.
But you haven't. Would you just keep it in the yard?
My guess is the EPA would have something to say about that. But
depends what you do with it. It depends what you do. But in any case, we don't buy crude. We buy refined product. The reason crack spreads have blown out is because there's enough oil, enough crude to go around right now. But because all this Russian refinery capacity is offline, and because all of this Middle Eastern refinery capacity is offline, if you need to buy product, there's not enough to go around. And so everyone is bidding up the refined product. That is what is happening. So I think on the crude side, as long as this blockade and whatever slowdown we have doesn't go past mid-August, I think we're okay-ish. Beyond that, there's maybe 3 to 5 weeks of cushion at most.
The Financial Times quotes a trader as saying, quote, "We've burned through all the buffers we had, period, everything. All of that's now gone." Is that hysterical?
It's not too close to hysterical. I mean, remember, we saw basically these buffers were being eaten into from the start of March through mid-June. So it was 3.5 months. Call it like 16, 17, 15, 16 weeks that we went through. Again, President Trump himself said in mid-June, look, we were about 4 weeks away from, running out of any excess, crude oil that we had. Like, we were going to be out of, additional reserves. He wasn't making that up. He wasn't saying that just to say it. I look at the numbers, and depending on the pace of draws, once you get through mid-August, if the blockade's still in place, you probably have like 3 to 5 weeks, that you can get through without running into problems. There's not much cushion that's left. And this is if everything goes like smoothly, by the way. What if China starts buying 5 million barrels of crude a day again? They went from importing 10 to 5. What if they decide, okay, we're going to spool up our domestic refinery production to take advantage of these high spreads, and now we need another 5 million barrels of crude a day? There's no spare capacity to fill that. So it's a pretty dangerous spot. It doesn't mean that you're going to definitively run into those problems, but yeah, we've basically worked through the cushion that we have. I mean, you look at the numbers, we've taken the strategic reserve down. I mean, at this point, the strategic reserve in the U.S., I want to get the accurate numbers here just to make sure that I have it right. Okay, yeah. So this is as of today. Now, we're down around like 320 million barrels. Before this started, we were at 415. Remember, you can't draw the strategic reserve down to zero. It's a bunch of caverns in the southeast. A, they'll collapse. B, you've got concerns about degradation just from the process used to get the crude out, which is you pump a bunch of water in. Oil's lighter than water. The oil floats to the top, and that's how you get the oil out of these things. So you've got concerns there. And we don't even know how far down you can draw these because the bottom ends up being a bunch of sludge that might not be usable as crude anyways. So you're not even really sure where the absolute bottom is. Plus, there's a requirement, I've seen differing opinions on this, that at least a portion of that needs to be kept in storage for potential military use, and so you can't use all of it anyways. But we're pretty much, the limit of the presidential authorization goes down to around 240 million barrels. We're at 320 now. So you got like 80 million barrels left there. Your commercial stocks, you've gone from, maybe an 80 million barrel cushion as well to somewhere between like 20 and 40 million barrels of cushion. There's not much left. Like there's not much cushion left at this point if this blockade goes for a while, if China starts buying crude again, if Iran decides to target exports through the Red Sea using the Houthis, who are now kind of upset with the Saudis, who just launched attacks at them a couple days ago. And so the Houthis might say, fine, no more oil tankers going through the Red Sea, which is another 7 million barrels a day that we've been able to bypass. Like, I don't know. Like, the bad scenarios get very bad very quickly. There's also a path where, hey, usually once we start talking about these kinds of escalations, okay, they try to work something out. I don't know if that's feasible now. I don't know if the two sides trust each other enough to work something out now. The memorandum of understanding didn't even last a month before it broke down. It was signed on, June 17th or whatever? Marc, it's July 15th. Didn't even last a month.
Sorry? I don't know
What'd you do? What'd you do?
Is
it your fault?
So you can't draw that below 100 million barrels in your...
Draw what?
The SPR?
The SPR, I believe that without congressional approval, you can't go below 240.
Okay.
And even beyond that, it's unclear that you can get down to more than 150.
So there's always 150 million barrels that we can't get access to?
Well, it's kind of like how in U.S. commercial stocks, about 350 million barrels is included in stocks, but it's either in pipeline or tank bottoms that you can't access. But it's still included there because it has to exist in order for the system to work.
Okay.
So yeah, there's probably...
I mean, the engineers knew what they were doing. It's silly for me to question it, but...
There's probably somewhere in the ballpark of 500 million barrels of oil in the U.S. system that you just can't access because if you try to, the whole thing breaks down. It's no different from, hey, within the plumbing of your house, there's probably a couple hundred gallons of water. But you can't access it unless you have more water to push through. Like you can't, you're not just going to empty your pipes. That's not good for your pipes.
Well, you
It's
could
not,
do that. You go to the lowest. I'm not going to do
you, but again, like it's like you don't do that.
Well,
on
you wouldn't do that
because it's stupid. Exactly.
Tucker's like, please break.
We're going to take a break.
Please, guys.
Let's do it right now. We'll go to break,
Man,
and
I'm
when we
bored.
come back, we'll talk as long as Tucker lets us.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at ArmstrongAdvisory.com. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
I want to talk about a piece from Bloomberg Opinion. It's titled "Labor Force Participation is High If You Measure It Right." And basically what we're seeing is that the labor force participation rate, to no one's surprise, has been declining for quite a while now. And the reason that I say to no one's surprise is that the broad labor force participation rate includes people of all ages. And so you've been seeing, as we've gotten older as a society, a greater proportion of those people are not people that you would want to see working, because you'd say, hey, you should be retired right now. Like, what gives? Why are you not? And so the labor force participation rate peaked in the late 90s at around 67%, and it's been on a pretty steady decline since the financial crisis, where it's gone from around 66% down to around 61%. Most of that is just because of aging. There's a few other things here and there, but it's mostly aging. If we look at the prime age participation rate, that includes people age 25 to 54, and that peaked back in, again, the late 90s, which, again, for better or worse, I think probably the best economy outside of the 1950s that we've ever seen in the United States. And that peaked at 84.6%. It's now at 83.3%, within sniffing distance of that all-time high. So I don't think this piece is particularly revolutionary. What I do think it suggests is there's not much more room in that age 25 to 54 to have people, come into the labor force to fill jobs. And what this does mean, in my opinion, is, hey, if there is ever any, meaningful uptick in demand for labor, there just aren't people that are sitting there ready to pick up that slack, which potentially means higher wages, which means potentially higher inflation.
I think that is the key point. There are some interesting points made in the article about how you can adjust participation to account for changes in demographics so you don't get fooled by a low number suggesting that there's slack in the economy, because it may not. And that's precisely Justin Fox's point in this article, and he's right. That 25 to 54 is typically used by researchers as a quick and dirty way to get a sense for whether there is underemployment in the economy. If the answer is yes, the Fed can afford, potentially all else equal, i.e. depends on what's going on with, say, oil and elsewhere, Fed can afford to ease, stimulate demand, get those people to work. But if there's not underemployment in the economy, say using that 25 to 64 metric as your measure of the extent to which there are people looking for work who don't have it, or who would enter the labor force if it were more inviting, the Fed can't push without risking inflation. So I think you made the key point. That's what this is. You may be interested in this as like a researcher, but for us, for generalists, you're interested in this because it's one of several measures that you could use to get a sense for whether or not there's any slack in the economy.
We've talked about this before, but it sure feels like if you had to time travel to 2050, you go 25 years ahead from where we are right now. You look at the last 25 years just as an example, and if we look at we got to go to break. I want to do a little comparison just of inflation rates. And kind of what we've seen historically versus, realistic thoughts about the future. So let's take a quick break, and when we return, let's talk about that. Kind of, hey, what do we think inflation may be over the longer term, for the next generation here?
Bringing bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are modestly higher with tech building upon yesterday's gains. Wall Street's also continuing to monitor oil amid new attacks from the U.S. on Iran. Right now, the Dow is up about 1/3%. S&P 500 is up 1/4%. NASDAQ up nearly 0.5% higher. Russell 2000 is up nearly 2/3%. 10-year Treasury yield is down 3 basis points at 4.55%. And oil down about 1%, trading at $78 a barrel. Shares in ASML are dipping slightly after beating second quarter expectations and lifting its annual sales guidance for the second time. The company also said it would increase output of its chip-making machines in the coming years. Meanwhile, PayPal stock is surging nearly 17% and is on pace for its best day ever after Reuters reported that payments processor Stripe and private equity firm Advent would offer to buy PayPal at $60.50 a share, which would value PayPal at more than $53 billion. More bank earnings were posted earlier this morning. BlackRock shares are up 7% after the firm's assets surged to a record $15.3 trillion in the previous quarter. Morgan Stanley has now turned slightly negative after it posted record quarterly revenues and profits, and after its 25% plunge yesterday, IBM shares are down 1% at the moment. Tuesday's session marked IBM's worst trading day on record after its preliminary second quarter results disappointed. I'm Tucker Silva. That is Wall Street Watch.
So we've got a piece in Bloomberg. It's titled "Boomer Wealth Transfer Set to Favor America's Richest Families." And I'm not really sure if this is something that I should be upset about or happy about or in between. I don't know. I'll quote here. "An unprecedented transfer of wealth in the coming decades is likely to disproportionately benefit America's most affluent families, boosting their fortunes by trillions of dollars, according to a July report from Visa. Almost 3/4 of those expected to inherit from baby boomers are already in the top 10% by household net worth," the report found. So basically what it's saying is that the ones who are expecting large inheritance from baby boomers are already relatively high in terms of net worth, which, if I'm being honest, tracks. One of the best predictors, and again, it's a little different in the United States where there historically has been more income and class mobility, but generally in just about any society, one of the biggest predictors of the affluence of a generation of people is, hey, what was the previous generation's wealth level? Like, that's just kind of how it is for any number of different reasons, either being able to avoid going into debt because of, parents being able to provide certain things growing up, or being able to receive gifts from parents while, an adult. Like, there's all kinds of different reasons for that. So I'm just not sure if this is something that, like, really is worthy of being upset about. I generally think, look, there's a federal estate tax that's in place. We can have conversations about, hey, like, what level of, wealth should that federal estate tax be applied at? But I'm not really sure what you would expect. Generally, the money that is coming from a family is going to go to other members of that family, and they probably have a pretty similar level of wealth relative to their peers at a similar age. I'm just not sure what anyone else would expect. Correct?
Yeah, the headline states the obvious.
Right, like,
wealthier families will transfer larger amounts to their
kids.
Oh,
yeah, like,
yeah.
Well,
really, it's not the poorest?
Now,
Thanks, Bloomberg.
If you do want to have an interesting conversation, I do think the interesting conversation to have is about the step up in cost basis that a child receives when inheriting assets, and whether or not that is something that should be in the tax code. I think there's a real case to be made that no, it shouldn't be. It's not like
What's the argument for it? Have you ever heard a moral or economic argument for it?
No, not one that I buy. Here's
I
the
can't
thing.
come up.
Here's the thing. So
sorry.
if just for people who aren't familiar, if let's say that you have a parent who has an asset that they purchased for $100 and it's now worth $1,000. If you inherit that asset from them, you inherit it at a cost basis of $1,000, meaning that you can sell it for $1,000 with no capital gains tax being due. This despite the fact that there is a big capital gain that accrued during the parent's lifespan. The case that you do hear made is, well, you don't want to, punish kids for inheriting the asset, to which I say, well, they don't have to sell it. If it's whether it's, Microsoft stock that the parents had, whether it is a property, if you don't want to realize the capital gain, don't realize the capital gain. If you do, why should the tax from that capital gain be wiped out simply because the parent died? Because this leads to the, often publicized strategy of, hey, do you have highly appreciated stock? Great, hold on to it until you die, and then your kids don't have to pay taxes on it.
There must be a tax law precedent, something to the effect of the basis follows the person, not the asset.
But why should it?
I'm not
arguing. There's
for or against it. I'm just trying to rationalize
just because you die doesn't mean the gain didn't happen.
I don't disagree. I'm just trying.
Oh yeah, no, I understand.
There must be some principle that I'm not, which is not surprising because it's not what I do, that I'm not aware of.
So I understand the idea behind, hey, for smaller inheritances, we don't want someone to have to sell this property or this asset in order to pay an inheritance tax. I understand that. But this is, okay, let's say that your dad bought $10,000 in Microsoft stock back in 1982 and it's now $10 million. Why do you get to sell that for no taxes just because your parent died? Text us at 617-362-1385 if you have any thoughts on that. While we're talking about the topic of inheritances, good reminder, the Armstrong Advisory Group this month does have a guide. It's titled Talking to Your Kids About Inheritance. And whether it is something where you say, hey, I've got a huge estate to pass on, or, hey, I don't have much to pass on, having these conversations before the stress of a parent or spouse passing, these are conversations that you need to have without all of that additional emotional baggage. So you can request the guide by calling 800-393-4001. You can also go online to armstrongadvisory.com, click the monthly guide button, and you can request it there. Again, it's titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last segment, we were talking about inflation as it relates to the labor force, and basically made the case that, hey, if you have a tighter labor force right now for any particular reason, it could put upward pressure on wages and potentially upward pressure on inflation as a result. Other factors that are out there. Globalization, whether you like it, hate it, or are indifferent to it, I think it's pretty impossible to deny that the reason companies globalized in the last 45 years is to reduce their cost of either labor, manufacture, or both of those things. And so globalization most likely has been another positive force towards reducing inflation during
I don't think
that
so.
time.
Not over the long term. Long-term inflation's monetary. This isn't me. This is the thinking.
Sure.
Inflation's monetary. So globalization will affect a relative price, imports relative to stuff, a hamburger or whatever, but not the general price level. In the short term, sure, if we suddenly flooded auto markets with Chinese cars,
sure,
that would bring inflation down. But as Kevin Warsh pointed out this morning, correctly, he was talking about AI. Somebody asked him, "Is AI going to push inflation up?" And he nailed the answer. He said, "It's a." He didn't say it this way, but what he meant was, "It's a." Now I like him so much, I'm putting favorable words in his mouth.
There you go.
He said that's a change in relative prices. He says I'm responsible for long-term inflation. He's absolutely right, and that's the reason why, in the long run, many people did cite globalization. in the early 2000s.
How do we define long versus short run for
10
something
years
like
or more
inflation?
is when you see measures of the money stock highly correlated, like 0.9 or above correlation, that measure of co-movement that you talked about earlier. Measures of the money stock growth correlated with measures of price level increase, i.e. inflation. And that is true no matter what country you look at.
So let me ask you this. Previous 25 years, actually since the start of 2001, so a little more than 25 years. Or maybe a little less. I always forget if you need to include...
Yeah,
whichever.
right. It's very annoying.
Yeah, it is.
Can we have somebody settle that, please?
In any case, since the start of 2001, headline CPI in the United States has averaged 2.57%. Do we think that between now and the start of 2050, inflation is going to average higher or lower than that?
That also depends on what you think. Okay, so we talked about the money supply being not just the main, but like the only determinant of long-run inflation. I know that sounds like a really stringent, strong statement, but most researchers would agree with that. What pressures are going to exist that could cause the money supply, the Fed, I gesture toward TV here because Warsh is testifying, to print more money than is warranted by the growth in the economy's productive capacity?
Sure.
Fiscal pressures. There's this fiscal theory of the price level. That's an actual school of thought about how inflation about why inflation is what it is over different, I'll just say, eras.
Mm-hmm.
Fiscal pressures will be greater. We've got 6% of GDP deficits now and no end in sight to that trend.
We don't seem to have any appetite for closing that gap.
No, right. Yeah, very well put. So if you subscribe to the fiscal theory of the price level, you'd say higher. How much? I don't know.
I tend to lean towards higher as well.
Oh, absolutely. Yeah.
But I think it's important to note, like, when I say higher, first of all, I love when people are like, oh, we're going to have hyperinflation. It's like, no, like, you idiots, we're not going to have hyperinflation. Probably. Like, again, like the very nature of the U.S. economy and its place in the world makes it really hard for us to have hyperinflation.
Yeah, I tend to agree.
But could it be a case where, hey, over the next 25 years, instead of averaging 2.5% inflation, do we average 3? Do we average 3.5?
In the 70s, we had 7.3-ish.
To be fair, there were significant changes to the monetary system that took place then that also contributed to that, as well as multiple energy shocks that were happening.
Well, the shocks even out, though, and those changes, yes, but they allowed the Fed to say, we're not worried about the dollar anymore, and to print too much money, basically. So I would, of course, put the blame on the monetary authorities, on the Fed.
Is there a case to be made that we see something similar over the next 25 years? I have a tough time getting to like that level. But here's the other thing: is when it comes to the high levels of debt that we see throughout the federal government right now, historically the way that governments tend to deal with that is by inflating that debt away so that they don't default in nominal terms. They don't like stop paying it, but they might say, okay, we're just not going to pay you back really with 100 cents on the dollar in real terms.
Yeah, bondholders get creamed.
Correct. And that's how we tend to deal with these things historically. We saw this after World War II. Like, this was the case then. So I think this will be something where, again, if you... I don't think we can put this on the board, right, Tucker? 25-year bet?
No.
25-year bet's kind of a little tough.
Yeah.
But if you had to pin me down, yeah, I probably think inflation over the next 25 is going to be higher than 2.57, in my opinion. Let's take a quick break. When we return, we got Stack Roulette coming up next.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
All right, Mark, what do you got for me for stack roulette?
I was going to continue on that point about how the deficit after World War II came down. It's just a little too dry for stack roulette because we know what happened. Everything worked out okay. I got to say, because we haven't talked about Kevin Warsh, but he's just hitting all the right notes in his, congressional testimony. And he is talking to us. He's trying to convince us, you, me, everybody listening, even Tucker, that he will do whatever's necessary to get inflation under control, even if it means economic sacrifice. He didn't quite put it that way.
Yeah.
But he's conveying, I think, Steely-like determination and laser focus on inflation. The Fed has other jobs. He is... he clearly views the inflation mandate as paramount, even though the law's not written that way. We'll see what happens when the economy needs employment help and inflation remains high. We'll see where he comes down.
You know,
like if. Yeah, well, it's going to happen during his tenure.
In Warsh's, inflation might not remain high, while if there's a
That's true. If there's a demand contraction, it could. Yeah.
You know.
Yeah,
So
true.
I think in Warsh's perfect world, hey, he's able to talk toughly now, and inflation never
That's how
becomes
you
a
build
bigger
credibility,
problem.
though, right?
Correct.
Yeah.
This is what we said he should do. Coming out is, look, if you want to build credibility, you need to come in and say, I'm going to deal with inflation, which is exactly what he's done. The test will be if inflation does not go away based on, just the passage of time from this spring. If inflation does not go away and, in fact, becomes a bigger issue, then are they actually going to take appropriate action? I'm not going to prejudge. I don't know what they're going to do, and I don't know if inflation will go up. But in a perfect world, it's, hey, inflation goes from being, in the mid-3s now back down into the mid-2s, and Warsh can come out, 6 months from now and say, yep, we've waited, we've seen, the cycle move, and now we can, move to reduce interest rates. That would be his perfect thing, is not needing to do anything on inflation
A strong
now.
disciplinarian, I guess like a parent, doesn't actually have to follow through because you believe them and you change behavior. That's exactly what he's trying to do. So there's a lot of stagecraft and optics in being a Fed chair. And I put too much emphasis, I think, when he was first nominated on his non-mastery, because he hasn't been trained as an economist, of the technical part of the job. But I realize now, even though Volcker was a trained economist, what he had was that sort of stagecraft down, and Warsh seems to have that. It's like an indescribable quality. I don't think Powell had it.
We'll
Warsh seems
see.
to.
It's been a month.
Yeah, I know. I'm really, really excited, and I'll do a 180 if they fail to contain inflation. But so far, I think he's hitting all the right notes.
Yes, I think he's been good so far, but it's been a month and nothing's happened yet. So let's, remember, Powell was tested through, several different things. Warsh hasn't faced a single test yet. It's been 30 days.
Yeah, but But Powell never established his credibility as an inflation fighter. You're right. Because
the problem is, here's the thing. Powell did. He never had to begin with, but he talked like one. And then the issue was in 2018, equity markets started breaking down, and Powell was on this, reduce the balance sheet, raise interest rates gradually.
Yeah.
And he basically got spooked by it and was like, I'm not doing this again. And pretty much since then, that was the playbook. So I think we need to see how Warsh responds when pushed by markets in either direction. Because anyone can talk nicely for a month.
Yeah.
Nothing,
well, he's made some substantive changes. I agree. It's
nothing's
too early
happened
to be
yet,
as excited as I appear to be.
I'm not saying he's good or bad. I'm saying let's see how he does when pushed. Quick break here for the entire rest of the day, but don't worry. We're going to be back tomorrow and more Financial Exchange then.